What's going on, people? Back with a bang. This is the Money Management, back here to bring you guys another video today. So we've not done a video during market hours in a while. So here I am now. As you can see, the market closes in 3 hours and 23 minutes. So we've been open just over 3 hours, and it's been a pretty crazy day. As you can see, the index has dropped, pulled back heavily before shooting up and rallying within about an hour period. And now we're sitting pretty currently on the uptrend. So we're going to look at a few different stocks, and we're going to also look at a few different articles. We're going to start off here. The stock market is in trouble. That's because the bond market is very close to a crash. So this investor, Larry McDonald, says, don't assume the worst is over. So we're not going to go fully deep into this article, but the reason I wanted to highlight this is, look, there's a lot of times the market pushes up, the market rallies, the market starts uptrending, and everyone's like, yes, the markets are back, we're going to start trading upwards, we're bullish, this and that. That's not always the case. Like I've said before, a lot of times you are going to get those small rallies within a big downtrend. You are going to get those little periods of bullish momentum during a bear market, but it doesn't mean the worst is over, as this guy says. Here's another one. Here's how you'll know stock market lows are finally here, says legendary investor who called the 87 crash. So this guy, Paul Tudor Jones, says this. He says, keep an eye on short-term treasury yields. There is a relation between the treasury yields and the overall stock market. If you guys don't know about that, I've made videos on that in the past. So here it is. Here's the article. Now, this is the kind of stuff I do during market hours, just so I can kind of get an idea of what to do, what not to do, just to help me with my trading a bit. So here we go. In regards to this guy, Paul Tudor Jones. So here you guys see VIX, the volatility index, right? Pretty much the opposite of SPY, the inverse of SPY, right? Same kind of story. When you see VIX up, SPY is usually down. When you see SPY up, VIX is usually down. Same thing with the Treasury bond. It's exactly what Paul Tudor Jones is saying. Here we go. Bond prices fall as yields climb. It is that simple. It is that simple. Here it is. The stock market is surging as the US dollar retreats. It's all about bonds. Same thing. When the dollar is up, the market is usually going down. So anyway, let's get back to the topic of today's video, the stocks which are moving right now and how the markets are looking. So I'm going to start off where we have most recently been starting off majority of the time. That is with SPY. Okay. Now I'm very intrigued to see how this pans out, because a lot of stocks are pushing right now lifetime, which is why I like recording videos during market hours. Look, here we go. By the way, look at this potential double bottom here on the daily chart. But let's have a look at the 15-minute chart so we can get a better idea of what's happening right now intraday. So lifetime, SPY is pushing up. Look at that green candle on the 15-minute. Wow, it's right around my resistance now. It's going to be intriguing to see how this plays out. So whenever you see these kind of things, my first thought is, everyone's panicking, everyone's probably jumping into calls. If you've missed the bottom, it's okay. Be patient, because if it gets rejected here and starts downtrending, you want to see if it holds at the 15-minute zone here, another 15-minute support here. All sorts of things can happen, right? So my point here is, once it breaks this green level of, or green line of resistance, right, this zone here, once it breaks, then you can start looking at a push up to 366 and beyond. But in these moments, right, lifetime, I'm showing you guys right now, what you want to be doing is scanning, taking a look at different time frames, seeing how the candles are performing. Here it looks like it's overbought. You see the RSI could potentially be about to cross over. Let's go to the 3-minute. Let's take it further. Okay, it doesn't look like they're crossing anytime soon. But again, just look and see how it performs. Wait out, the time, wait out and wait to see how it performs. 30-minute candles are looking beautiful. Obviously, if you did day trade this and you got in an entry anywhere near here, even on these wicks, you're sitting good, you're eating nice. Look at the crossover and the moving averages here. All these things are important to take into consideration before you make your decision. Don't just blindly jump into trade just because people are in it, just because you think, oh, it started to run up, it's going to continue to run up. But different indicators show you different things. So as I always say, here we go, we push past the green. Let's see if we close above it on the 15 and then the 5. Then, as I mentioned to you guys, we could expect a push towards 366. Maybe not today, but sometime within the next couple of days, maybe before CPI. And in my opinion, definitely after CPI Thursday. Now, speaking of CPI, tomorrow's PPI, Thursday's CPI. So we're going to find out about what people are spending, how the economy is looking, all that kind of stuff, the usual jazz, right? We're going to find all that out. And we're going to see how much Feds raise interest rates by. My opinion is if we see anything less than the expected, the rumored 8.3, then we are going to start running Friday. Even Thursday, second half of the day, we could start pushing up running, right? Otherwise, if inflation remains at 8.3%, I would not be surprised to see a big sell-off, especially towards the end of the week. Now, of course, you guys know, look at the hourly chart. You don't need to be told. We've been more bearish recently than bullish, right? But all you need, as happened in September, all you need is just a little bit of positive news or less negative news than expected, and you will see a run. It's happened in September. Let me show you guys the beginning of September. It's happened in July. There we go. Happened in August. September, it happened briefly here as well. All you need is a bit of good news or, again, less negative news than expected, and you could see a huge run. Now, that's it for that kind of thing. We'll wait and see how that plays out. But let's go over to the oil sector because this is a lovely sector that I love playing, right? So here we have Oxy. Look at the wick touching the moving average and pushing back up. Oxy looks good for calls once we can break above these moving averages, and obviously if these moving averages do not cross over to the downside. Here it looks like they're not crossing over to, steadily trending away from each other, but it's intriguing to see how Oxy will close at the end of the day. I don't think we've missed the play here yet. It can still run up to $72, as was my price target for this week, but it's definitely something to keep your eyes out on. Another one from that sector, ExxonMobil. Holding above the moving averages, let's see where it closes the day at. I think we can break out into this resistance zone. You can take a nice day trade from maybe $100 or just over $100 to around $102, possibly up to $103 this week. Those are two stocks I love trading. You guys know I love that sector. CVX is another one. That's Chevron. MRO, that's Marathon Oil Company. You can have a look at those ones as well. But in terms of my trades for this week so far, we've been in the market 2 days. I've traded ExxonMobil. Unfortunately, that did not pay off. It looked like I was too early with the calls. But I've also traded AMD to the downside. As you can see, AMD has been on a steadily climb downwards. AMD famously, well, I guess we could say famously, made me 518% Friday just in this huge downtrend. And then I did take $59 puts going into yesterday. Now, it's just starting to push up a little bit, but I don't see any strong potential for AMD right now. Next play I was in this week was PayPal. And this is another one where I have to show you guys the gains. I have to show you guys the gains because this one really was something else, right? Here we go. Here's PayPal, my PayPal puts. So currently sitting at $5.90, 2.9K value, right? Let me just show you guys how much I put into this. So I put in 1,075. And obviously, like I said, 1,075 turned quickly to 3K, very quickly to 3K. After the video I loaded Saturday, there was a PayPal news, right? PayPal news saying that they can take out 2.5K from your account if you're a PayPal user, if they think you've said something wrong or something like that. Something really dumb where it's very subjective and it's just completely random. Anyway, so that happened, right? And then PayPal clearly decided, they were in a bit of trouble, and they decided that they would remove the ability for users to close their accounts. That kind of tells you how bad the situation was, right? Like I mentioned. Also, this is a very interesting hammer candle on PayPal right here. Intrigued to see how this plays out. But anyway, long story short, PayPal dropped from $92 last week all the way to lows of $79.85 today. And I was able to flip a nice bag on PayPal with the swing trades from yesterday to today. Now, like I said, I'm intrigued to see how the week finishes off. I still think tomorrow, Wednesday, we finish red. I feel like there's a lot of hype right now, a lot of buying pressure, which is happening right now, which is good to see. But I feel like, again, it's just one of those short-lived rallies. You can see them here and there. It's normal. Here and there you get those pushes upwards. I think this is another one of those before some more red tomorrow, and then I guess also Thursday, first half of the day. But really, we'll just see how things play out. As always, you just got to trade what the market gives you. Look at Tesla. Tesla did not hit my price target of $200 yet. It's still hovering around $220, which could be a nice price point for shares for you guys long term. But as I always say, what you want to focus on in this time, protecting your funds, keeping your capital, stocking up for the long term, and of course, limiting your risk when you trade. It's a tough market, but if you're in this market and you're trading right now, I salute you. Here's Netflix, similar price point to Tesla as well, by the way. And again, long term, look at the upside on Netflix. It's crazy upside, right? You ride it back up to 400, you got 100% returns with the shares. You ride it back past 500, 600, you're looking at 200% with the shares. So always remember that kind of thing. But overall, I'm very happy with how this week's gone so far. As I've mentioned to you guys many times, trading does produce a lot of opportunities, and the Discord has been hot recently. So if you want to come and trade with us, come to the Discord, come join the Royal Trading Academy, check us out. We've got call outs, breakdowns, live trading during the day, study sessions after hours, study sessions during the weekend, all that kind of stuff. So come and join the Royal Trading Academy. Also, I've got the stock option starter pack for those of you who are new to stock options. Those of you who are new to trading, please check that out as well. There's 10 videos there, you have access to them for life. And then lastly but not least, check out my social media because I'll be posting on there as well, posting the plays on there, posting the updates and different techniques and strategies I've used. Check out my Twitter, Instagram, and TikTok at The Wealth Prince. But that is it from me. It's been another good trading day so far. Like I said, we keep making money no matter what the markets are doing, no matter what's happening around us. We keep making money. Thanks a lot for today's video. That's it for me. I got into making, you got into making. See you guys next time for another video. Peace.
Game over.